please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. Welcome to Halftime Report. It's 12 noon. We're halfway through the trading session, and what a choppy day it's been so far. The rally from the morning dip has been sold into, and as we speak, the benchmark indices are absolutely flat, but volatile moves, as you can see, up until now. I am Reema Tendulkar. With me is Sumaira Abdi, and we are with you for the next 1 hour. Hi.
Hi, Reema. Good afternoon to you. So let's get started. Lot of earnings reactions and earnings action.
It down to individual stocks that are making news this morning. This is our Movers and Shakers segment, and Sonal joins in to kickstart it on DLF. Sonal?
Well, you know, Reema, the stock opened up in the red because of a weak performance in terms of the income statement, but now it's in the green because two things have to be taken care of. The earnings have to be adjusted for the stake sale that the company had done in DCDDL. In terms of revenue, on a YOY basis, the revenues had gone down by 38%. The company reported an EBITDA loss of around 14 crores versus profits last year. Profits also went up by 70%, but that was majorly due to higher other income, exceptional gain, and higher share in the joint ventures. But the management guidance is very positive. They say that the net debt currently stands at 6,500 crore rupees, and by end of this fiscal, they expect to be net debt free, and they expect that they'll be paying off all its debt. Also, they are looking at a sales momentum of 500 crore per quarter. Bookings this quarter have been higher than last quarter, and the demand is also coming back. So the momentum in terms of demand and the bookings is looking very positive, and that is why the stock is in green right now.
All right, Sonal, thanks very much for that. Just Dial, that stock is soaring in trade post their numbers. So the earnings were in line, they met estimates. We caught up with Abhishek Bansal, the CFO of the company, earlier this morning to talk about the outlook now for FY19. And he says that the year itself looks good and they're targeting a growth rate in the teens.
Overall, things look quite positive for FY19. Teens is what we are definitely targeting. And as the way things stand and as the way FY19 has started, we are pretty confident that the foundation that was laid in FY19, it would see the company turning around completely in FY19. In terms of overall EBITDA, if we see, FY18 EBITDA grew at about 50% year on year, despite substantial increase in our advertising spends. So for FY19 as well, about 20 to 23% margins are pretty easily sustainable. And if we are able to achieve the desired growth rate levels in top line, I think margins could see some expansion as well. Advertising spend, FY18 we spent about 65 crores versus 28 crores in the previous year. For FY19, again, we would want to spend something in the range of 8 to 9% of our top line.
All right, let's move on. It's a weak quarter for MGL, and Sonal joins us for more on that.
Well, yes, the stock is declining in trade today, and rightly so. The numbers were very weak, big miss on the operational front. The revenue came in flat at 643 crores sequentially versus a poll of 589 crore rupees. EBITDA went down by 18%, and our poll threw up a number of 209 crore rupees. So it was below those expectations. Operating profit margins also came at 30% versus a poll of 35.5%. And PNG volumes, that was a big miss. They came in lower by 1% sequentially versus an expected growth of around 5%. And that's why the stock is down in trade today.
Sonal, thanks very much for that. Manisha, what's happening on the sugar front?
Well, plenty really. In the international markets, you have seen the US sugar prices gain up by 4% overnight. And the Indian markets, of course, have seen strength on the back of expectations that the government could come out with some more supportive measures for the industry. Within this, there is a creation of buffer stock, assisting the companies on ethanol production by giving them soft loans. And there also is about putting a floor prices for sugar, which remember have declined by 30% since the month of October. So on the back of all of these expected measures is why you have seen a gain up in the sugar prices and the sugar stocks.
Nisha, for that, Bharat Forge profit at 100 crore is looking disappointing. It's come in way below street expectation. The CNBC TV18 poll was for a profit of nearly 250 crore. Compared to that, the company's delivered 100 crore, which would compare with 180 crore a year ago. Revenues at 1,466 crore is bang in line with street expectations. So we'll just try and find out if there is an exceptional loss.
They have also, their cost of raw material has gone up significantly, actually, if you see on a Y-on-Y basis. As well, finance cost is, almost, you can say, double on a Y-on-Y basis. Other expenses too have shot up. So I think it's a whole combination of things which are actually hurting them this time around. Sonia, you have any more clarity?
No, in fact, the top line looks okay. I think...
there is an exceptional loss of 133 crore that they have, I think, this time around. So we'll just wait for that to get flashed. I believe there is an exceptional loss.
Yeah, as compared to a gain on a Y-on-Y basis.
In fact, they have mentioned that the loss is on impairment of investments and provisions for losses on projects in many of their subsidiary companies. So it does not have any impact on the core operations of the companies. But there are, this exceptional item represents two losses. One is because of the provisions for losses on one of their subsidiary companies. And the second is the loss on impairment in their investments. So they did make an investment in one of the joint venture companies, BF NTPC Energy Systems, and they made a provision over there as well, because of which they've incurred this exceptional loss. So yes, one-time loss of 133 crores is on account of that. I guess if you adjust that, these numbers seem largely in line on the bottom line. On the top line as well, the numbers are largely in line. I'm just waiting by for the EBITDA margins. I think there's a bit of disappointment over there. It's coming at about 28.3 versus about 30%. That was the expectation. And Sumaira, as you rightly pointed out, it is a couple of these costs that have gone up for them. The other expenses on a year-on-year basis have risen about 100 odd crores, and that's impacted the operational performance for the company. Of course, raw material costs for the system as a whole has gone up, but this time for them as well, raw material costs have picked up to about 534 odd crores. I'm just waiting by for a press release. Generally, they put that out to talk about what the outlook is for the business, and that's more important than the numbers this time around. But top line, I think, is fine. It is just the operational performance that has got hit a bit because of the higher other expenses that the company has seen and higher raw material costs. Bottom line, there's that exceptional loss that we were talking about.
Okay, so that's about Bharat Forge. The stock is down close to about 3.5% in trade. Let's get the intraday chart of Bharat Forge up for you on your screen. It's sold off post the numbers. There is an operational miss as well. Margins of 28.5% is lower than the CNBC TV 18 poll of 30%. And that said, there is still an exceptional loss, which is denting the company's profitability. Stock is now down closer to about 4%.
A lot of result reactions coming through. Advanced Enzymes is in focus. They've posted a good performance actually in Q4. The stock was a tad bit subdued. C.L. Rathi, the managing director of the company, now joins in. Mr. Rathi, good afternoon. Thanks very much for joining in. So it looks like this the human segment rather, which is the bulk of your sales, I think what 70-75%, am I right? That looks to have done well. Industrial processing has seen a bit of an uptake, but the other two segments, animal, food, etc., are not doing too well. Could you take us through some of the internals?
I lost.
Mr. Rathi, can you hear me?
Yeah, I can hear you now. Now I can hear you. Yes.
Hi, could you tell us about this human segment that's done well? What's the outlook now for FY19?
Well, FY19, our conservative estimate is we would be able to maintain our run rate of like 100-110 crore per quarter and much higher profitability due to favorable tax structure in the US as well as in India and various other, like, our Evox, last year we acquired Evox Technology Germany. That has impacted 12 crore on our PAT, actually. Otherwise, our PAT would have been substantially higher, would have been around 105 crore. Even we lost 3 crore due to foreign exchange, Indian rupee being stronger vis-a-vis other currencies in the last 4 years.
You're already doing about 110 crores, right, each quarter?
I think 108 crore we did, 109 crore we did just last quarter. 2 quarters we have been in that same ballpoint. So that's our current run rate, and that is very comfortable to continue. Plus, we may add up some positive surprises going forward.
Okay, what could be the nature of positive surprises, and what will aid that?
Honestly, there are, as you know, the same thing have been communicated. We have been working on a number of other industrial segments. Your animal feed could have some positive surprises. So those are the areas which we may give some additional revenue, but real visibility will come in next FY20.
Okay. Your capacity utilization is still quite low, right? At 40.
But it is around 50%.
50%. Do you see it improving going ahead? Can that be a driver?
Well, we don't look at always capacity as an issue. We always look at our customer being more happy, and how do we increase our margins by working with them. So that is our methodology, not as a capacity.
What is the mix between exports and domestic sales?
Export is still continue to be about 2/3 of our total earnings. Yeah, and around 60-62%.
Where are you seeing the most traction?
The most traction is US, of course, and then after we acquire UOX, we are working on enhancing our European presence. Of course, we have presence in so many other countries also. Almost we export to more than 45 countries globally, and we are working to expand our geopolitical range all over the world.
With this acquisition of Evox, your R&D expense was expected to increase, right, as a percentage of overall sales?
That's
okay,
right.
So will that not dent as a percentage of overall sales?
That's
okay,
right.
So will that not dent margins? What is giving you the optimism on your improving the profitability of the company?
Yeah, because this is being factored already. We already factor that kind of expansion increase in our R&D spend, and going forward, you will see. As like we will be further reducing part of our cost in UOX technology, and then from UOX technology also we do some work for other client, and there we are looking at a CRAMS model that producing as well as manufacturing for a client. I mean, developing the enzyme molecule and producing also in-house to ship it to them. So that will also give us some positive earnings in FY19.
Have promoters pledged any additional shares this quarter?
No, we didn't.
Okay, so are there any pledged shares? As of now?
Yeah, we will be as a promoter's policy, we'll be reducing our debt going forward, but there is no fixed timeline for it.
All right, Mr. Rathi, we'll leave it at that. Thank you very much for joining in. The stock is now higher by close to about 3.5%. The company sees revenue visibility of at least 100 to 110 crores per quarter, and they are looking to pare down their debt. There could be some positive surprises in their animal nutrition or animal feed segment. Let's move on. We've also got the management of Action Construction Equipment joining us. The company's posted a good set of earnings. This quarter, there is a revenue growth of 31%. Margins have improved to double digits, 10.4%. Saurabh Agarwal, the executive director of the company, joins in now. Good afternoon, Mr. Agarwal. Thanks so much for joining in. Good quarter. Do you see this kind of growth sustainable? Can you break down the performance segment-wise for us?
Yeah, good afternoon. Yeah, it's been a good quarter for us. And we are seeing continued performance going into this current quarter after leaving the last quarter. As a matter of fact, the rate of fresh orders coming in on a year-on-year basis, I think is still continuing. And we are seeing an increase of 40-50% year-on-year basis. So I think the momentum is very much there. And going forward, I think we should only be improving it.
Okay. Hi, Mr. Agarwal. Good afternoon. I think you had spoken earlier about seeing a top-line CAGR of about 30% odd over the next 2 years. So we're seeing some of that begin in Q4. Are you looking to perhaps even revise it a little bit higher now in FY19?
To be very frank with you, I think doing a 30-35% should be easy for this year and the next year. So CAGR would put it at 30-35%. And my heart tells me that it will be faster than that. But I think to be on the conservative side, 30-35% is easily doable.
Okay. What has been the order inflow for the company so far? What is your guidance? What's in the pipeline?
Like I just mentioned, the pipeline looks very strong.
Any numbers?
We really, I know the number of orders, but not in revenue terms, so I don't think it will make sense here. But yes, all I can tell you is that there's an increase of around a 50% year-on-year basis with respect to the fresh orders or the order booking that we have. And generally, it's about 1.5 to 2 months that we remain booked. So obviously we try to produce more if we get more orders. We have that flexibility because our utilization levels are still available with us.
What's the outlook for the coming year on commodity prices and the pressures thereof?
Yes, in the last quarter, steel did play havoc, but we have been able to pass on most of it. Going forward, I think they will either remain stable or can only cool down from here because the steel, which is our major input raw material, has gone up drastically. And if they remain stable, well and good. If they go down, definitely is going to add to our bottom line. Yes.
Okay. The NCLT had asked you to conduct a meeting with the creditors and shareholders regarding the proposed scheme of arrangement with Frested Limited. Could you give us an update on that?
Yeah, you know, this is about our subsidiary which we had in Romania, which was owned through Frested Cyprus. And we are merging it with the parent company. So it is, you know, the creditors and debtors meeting just in that respect. I think it's on 23rd June next month.
Why have the borrowings gone up this quarter?
See, as a matter of fact, they have gone down, but I think you must be comparing it with the old set of numbers vis-a-vis the new set of numbers.
What's the current number at?
The current number as per the new accounting standard, Indian accounting standard, is about 78.3. And that also includes now, as per the standard, you know, that redeemable preference shares amount has to be added to the debt. So that's why they're seeing a little higher by about 17-18 crores. But in actual effect, if you compare it with the last year's number, I mean, without Indian accounting standard being in place, should be about 62 crores.
All right. Mr. Agarwal, we'll leave it at that. Thank you very much for joining in. That is Action Construction Equipment. The order pipeline or the order booking is 50% higher than it was in the last year. So bullish management commentary. Let's get you the latest then in the Binani cement case. The NCLAT refuses to stay the Committee of Creditors' prescribed deadline of 23rd May for Dalmia to revise its offer. Ashmit joins in with the details. Ashmit, over to you. Okay, you know, Ashmit, we've got you on a bit of a scratchy line.